Hey guys, good morning. Welcome to the mortgage rate forecast for May 10th. And let's get started with some news. Bonds are slightly up today at about 101.70. Really, it boils down to the inflation news that's come out. CPI is showing that now inflation is right in line with the Fed's numbers, what they want, which is about 2%. So this is good news for bonds, even though the initial jobless claims are still showing that the unemployment in the U.S. is at record lows, which is not bond friendly. So other than that, the only other thing going on is there's going to be a coupon rollover today at the end of the day. So it's when you look at the chart, you're going to see the bonds kind of drop down quite a bit for no apparent reason. And that's just a coupon rollover. So it's kind of like similar if you own a stock, you have one stock, it's worth $100, and they split the stock, so now you own that same stock, but you own two of them, but only for $50. At the end of the day, it's still worth $100 though, right? So that's the basis of the coupon rollover. So don't be surprised if you see it dip down a little bit. As far as the MBA survey, I like this. Very simple chart. MBA showing the average consumer is receiving rates closer to about 4.8%. This is as of May 2nd. And when we get into the bond market charts, here's where we're at. You can see the bonds have really sold off pretty sharply since early April, but then from there we've finally got a little bit of footing, and now we're trading, if you look at my mouse, between a range at about 102 even and about 101.41, 101.40, 101.41. So we are seeing flat trading, bringing with it pretty neutral interest rates, no major changes in the last week and a half or so. To kind of quantify where Freddie Mac says we're at, their reports came out in April saying 4.47 at a half of a point. And as far as that goes, that's when trading was averaging about 102.20. Now we're at about 101.70, which is 50 cents difference. So based on Freddie Mac's reports, the average consumer may be paying closer to a point now for that same rate that they were getting in the average month of April. So that's where Freddie is at. As far as my last projection, it was a hit. We got it. And you know what? I'm going to maintain pretty close to the same trading range. I think we're going to trade flat for a while. I don't think we're going to go above 102.16 or below 101.20. So that means if you're floating right now and you have an opportunity to lock in your interest rate, you could see some improvement at about 46 cents, which equates to almost a half of a point. But we could also see the market go down, as much as another half point. So we're right in the middle of this trading range. So some of the analysts are saying, hey, float, let's, they think we're going to push up to the top. And one analyst is a little just neutral, doesn't think we're going to see much movement at all. So I would say if you have an opportunity to lock in here pretty soon, you maybe watch the market, just kind of be careful of the bond auction going on this afternoon. But if it was me, I would probably just kind of carefully float right now and just see if we can push up to that 102.16. So we have potential to do so, but your risk, you're right in the center. It's 50 basis points either way. So just be careful either way. Okay, guys, watch the market closely. If you have any questions, let me know. Hey, and that's it for today. We'd love to hear your comments. Leave your comments down below. Hit that like button before you go, please. And if you like regular updates every Thursday on what's happened with the market, hit that subscribe button. You'll just get a little alert. And anyway, if none of this made sense to you, it's okay. You can click Mortgage Bonds 101. That is at the top right, and that'll teach you the basics that you need to know when trying to figure out the best time to lock in your interest rate. Okay, that's it for this week. We'll see you next week. Take care, guys. Bye-bye.